Okay, well, this is Brian from First National, Brian Alexander, First National here in Bundy. And we've got Jason, it's one of our finance brokers. Maybe just introduce yourself quickly, Jason.
No worries. Hi, my name is Jason Bills. I work for 𝗏𝗏𝗄𝗄 Lending. I am the owner and operator here in Bundaberg. I service homeowners looking to purchase a property, refinance, get a better interest rate, and just basically take care of their home loans.
Brilliant. Well, it's good to have you, and we're going to just quickly touch on a few things and ask a few questions, and we want to dive straight in, and it's about the government schemes and specifically the Help to Buy. This story of buying under 700,000, there are a couple grants that you can do, and I know that you understand them, but we really want to look at the one that's the Help to Buy one. So can you just give us a little bit more insight on that Help to Buy scenario?
So basically, there are a number of grants available. Everyone knows about the stamp duty concession, or the first home owners grant, which is kind of a home builders grant now because you can't really do it for existing properties. Then you've also got other ones like the Super Saver scheme, but the big one that I would like to talk about is the Help to Buy scheme. Now, this one's brand new. It's very, very new. There's literally 2 lenders on the market that can actually assist with it.
Okay.
So it is quite limiting on which lender you can go with, which does come with its own headaches because you also have to fit into that lender's lending policy. But basically, you can buy up to a $700,000 property here in Bundaberg. It is larger in the capital cities and so forth. You can get up to $1 million in those cities, but around Bundy, it's limited to $700,000. There are some income qualifications that you have to do for it. $100,000 or just around for singles, $160,000 for couples, or if you are a single with a child, you can also earn up to $160,000 and still qualify for it. Now, the big thing about this one is it's actually not just for first homeowners. Okay, you can actually already previously own a property and you're going back into the market again, you're actually able to get this grant, or this scheme as it's called. A lot of the other schemes are actually just for first home buyers, where this one is actually allowing people to come back into the market again if they've had to sell for whatever reason.
Okay, so now if they're going to be buying for 700,000, they would then be financing what sort of amount, more or less?
Well, this is where it gets a little bit interesting. So the government, let's be blunt, stuffed up the economy pretty badly with the markets and so forth. They pumped in too much money into the system. Property prices have grown quite significantly, as everyone will agree, but wages haven't really caught up as much. Okay, so what the government has basically done is they're going, look, we're going to help to buy a property that may be outside of your current reach from a bank's servicing capacity.
So the affordability reach.
The affordability side of things. So someone might only be able to afford a $450,000 loan, but they want to buy a $600,000 property. The bank will actually cover the $450,000. Yep. The government will then step in and cover the rest of it, up to 30% for existing properties and up to 40% for brand new builds. So it's quite a large chunk that you don't have to actually come up with in regards to funding of the actual purchase. Now, there's a lot of hesitation in regards to those saying the government owns your property and so forth of that. It's actually not correct. The government actually don't own your property. You're the only one on the title of the property. The government will have a mortgage over it exactly the same way as the banks currently do, which just basically stops you from selling the property and not giving back the government their portion of it, because at the end of the day, they're a financial purchaser of that property as well. All right. So if you own the property for 5 years and then want to sell, depending on what the actual property value has done, you have to pay that money back to the government. And the key behind this one is if the property stays neutral and you borrowed $200,000 from the government, you pay the government back $200,000. But if the property market increases by 10%, you actually owe the government $220,000. So you have to give them that extra 10%.
10%, okay.
But the big kicker is if the market dips, you actually pay the government back less than the $200,000. So if it drops by 10%, you pay them back less 10%. And that's where the real big kicker is. So the government is backing homeowners to purchase their own property. Now, just because the government is giving you that loan, it is interest-free. You don't have to make repayments to it or any of that nature. But you can buy it back when you and if you can afford it.
If you like it, okay.
So as wages increase or if your life changes where you might So for example, change jobs and get a higher paying job. It might be $5,000 to $10,000 extra per year. That $5,000 to $10,000 extra per year can increase your servicing capacity, which then means we can then go back to the bank that's currently got your loan, say, look, I want to reassess my loan, I want to do a top-up application, which is buying a little bit more. We then get those funds, send it to the government, pay back their portion of that loan, and start buying back the portion that they currently own. So if they started at 30% or even 20%, you might buy back 5% at a time over the next couple of years.
Okay. And you could buy the entire amount out of it.
You will.
If you want it all in one go.
Yeah,
okay.
Naturally. If you get it inheritance or some very large lump sums, you can definitely do that as well. Or it's when you sell the property.
Okay. So that's a good opportunity. And how much money could you realistically save by using these various different schemes?
Well, it depends if you can do combinations. So you can use multiple schemes at the same time.
Okay.
So say, for example, the home purchase concession.
Okay.
So stamp duty concession, that will save you up to on a $700,000, probably around $17,000.
Okay.
The actual Help to Buy scheme, again, it's not saving you money as such. There is definitely savings there because you don't have to pay interest on the money that you're actually borrowing from them. Yeah. So there is a whole calculation there if you want to get really nitty gritty of it, which is thousands and thousands of dollars at the end of the day. $200,000 over a few years at your normal bank rates is quite a few $1,000s. So there are a lot of savings there as well under that scheme. But with the other schemes, you've also got the deposit scheme, which is the 5% deposit scheme. If you can afford the loan and you don't need the Help to Buy, you can also do the 5% deposit one as well, which will save you around about $30,000. Just in the lender's mortgage insurance.
Talking about that, on the 700 or less than 700,000, the deposit, I don't think we mentioned that, but what would the deposit be on that one?
On the Help to Buy scheme, it's actually 2%.
2%?
Yeah.
Okay, so minimal 2%.
The current one that's most people know about is the 5% deposit scheme, where the government will guarantee your home loan up to with a 5% deposit.
Okay.
It can get as low as 2% for single parents. But generally speaking, it's 5%. And basically what it's doing is it's covering your lender's mortgage insurance costs. So instead of the bank protecting themselves with lender's mortgage insurance, which is a little pet hate of mine, why pay lender's mortgage insurance which only protects the banks, does not do a single thing for the client, the government will actually cover those costs and say, look, we'll cover the loan. You can borrow up to 95% without having to pay that lender's mortgage insurance. And that's what that scheme's all about. Okay.
Let's break some myths now. Or mistakes people make when applying or in this whole process. You sort of indicated earlier that it was one that you really wanted to touch on.
Well, the biggest mistake is not getting your facts and figures up front. Once you go to purchase a property, once you put your contract on and so forth, it's really hard to try to fix up your current situation, especially from a broker's point of view. So if you don't quite fit into policies and so forth of that nature, it's really hard to try to fix it. So you may be coming against a no because you don't quite fit into policies. But if you speak with a broker first, we can then basically tell you where you will fit, because the biggest thing with a broker is we don't charge fees to our clients. We work for our clients, but the banks are the actual ones that pay us because we actually do their job by entering the loan into their system. Exactly the same way as a loans officer would when you walk into a branch. Think of a broker like a loans officer, but for every other bank on the market, not just that single one.
Yeah.
So we do the bank's job by entering the information in and bringing the client's loan to them. So they're the ones that pay us. We don't charge fees in 99% of the cases. There are certain times when we don't get paid by the bank, so different story. But generally speaking, we don't get paid from our clients. We work for our clients, so our clients tell us what they want. We then find the lender that suits them the best, and then...
So it's really understanding your client and where they're going to fit and which particular institution is going to say yes to them.
That's exactly right.
Instead of trying to go to 10 different institutions and get 7 no's and then you go, I've had enough, I'm not getting approved.
Yep.
But you could have got approved somewhere else.
Yep.
But you just didn't.
The Help to Buy scheme, people know about it now. If they walked into the top 10 different banks, one of those banks would actually know what they're talking about. The rest of them wouldn't have a clue.
Okay.
So that's where a broker comes into place. It's our job to know what all the different banks offer and then do the research in regards to the client's specific situation.
That client, yeah.
Like some clients are all vanilla clients. Mum and dad got 2 jobs, good wages. You can walk into most banks and get a job, get a loan.
Get a loan, yeah.
But not everyone fits into that category. So if you've had maybe a slightly bad credit rating in the past, or your job doesn't quite suit, you've just changed jobs, things of that nature, that's where the brokers come into play and actually are worth gold. Because instead of you going to a lender and going, oh, I want to do an application, here's my contract, and then they're going, yeah, so you don't fit this policy, sorry, rejected. And then you have to go back, cancel your contract with the real estate agent or the seller until you can actually get a loan approved. The other thing is pre-approvals. Biggest mistake people have is they think pre-approvals is the way to go. They used to be. They used to be phenomenal because they were fully assessed. So when you go to a bank and you ask for a pre-approval, they used to sit down, they'd look at the entire loan as application loan, and they'd look at everything, all the different policies, all the different tick boxes they have to go through. And they'd tick it all off except for the actual property because you didn't have a property at that stage.
Yeah.
These days, well, ever since COVID, when they got too busy and the property market started booming, one of the very first things that the banks did is they culled the pre-approval process. So pretty much what they're doing now is they're running you through a servicing calculator, which most people can do online.
Yeah.
And if it passes that, here's your conditional approval, subject to a full assessment, which pretty much means it's not worth a piece of paper it's written on.
Okay.
All right. The amount of time that I've had clients call me up and say, oh, we had a pre-approval that fell through because the bank said no to us. And I said, well, it's only a conditional pre-approval. It's not actually assessed by anyone. So, yeah, your numbers worked out, but your credit score was bad, or the deposit that you had wasn't quite enough, or it came from a gift, which is outside of that lender's policy, and things of that nature. So there's all those different things that we have to take into consideration.
That can make it difficult.
Yeah. So,
okay, so if someone's never purchased property before, what would their first 3 steps be?
Speak to a broker. Speak to a broker. Brokers have kind of taken over the loan market. We now do about 60 to 70% of all loans that are actually done. So most people have learned, speak with a broker. If you just go to a bank, the banks are going to show you just what they want and what they want to sell you. Where if you speak to a broker, we find out what you want and then find the best solution that fits your needs instead.
Okay.
We also then do all the legwork for you. So we find out what you are, who you are, and what situation you're in, and then find that best solution for you. If there are gaps, we'll show you, okay, look, you're currently lacking in your deposit in this regard. Or, look, I know you're getting a gift from your mum for the deposit. Unfortunately, you're going to have to hold that in your account for 3 months before we can use it. Little things like that we can give you the hints and tips about.
Okay, so the main thing is to actually go to a broker, find and understand where you fit in, and just then establish
100%.
Before you start looking for a property, then go look for the agent, and it'd be probably the 3rd step.
Yeah, like I was having a chat with a client last night, truck driver, looking to buy a house. Getting a little bit older, he's over 45, so he's a little bit worried about his age as well. Just wants a property. Didn't think he was going to qualify. Really didn't think he was going to qualify. So I had a chat with him, told him about these grants and the government schemes that are available to him. He got really excited. He goes, what? So I only need to save $20,000 and I can buy my own property? I said, yep, that's exactly right. That's all you need. That covers your deposit, that covers your solicitor fees, that covers your transfer duties, building and pest inspections, all those little costs that people don't always consider. I broke it all down for him, and then he was like, okay, I'll be calling you back as soon as I've got that money saved up.
Yeah.
So he didn't know how close he was.
Yeah.
It's those little differences.
So it's just those opportunities that people tend to miss and put off. Makes me think of my son-in-law as well. So, so what advice would you give to someone who thinks they can't afford to buy? Now, there's a real instance you've given of that person that came to you, but what advice would you give?
That would be the same thing. Let's have a chat. With My Castle Lending, we basically have a fairly rough chat to start with. So we'll get an overview of you. I use online calculators just like everyone else, but I'll ask the right questions. And then I can do that online servicing calculator for you and give you a bit of an idea on where you sit servicing wise. From that point forward, we can then work out deposits, any other kind of gaps that we need to fill in, and work out a bit of a plan. If you believe, and over that conversation, that you're actually in a position to actually purchase now, we then start doing a full fact finder and actually getting all your documents, getting everything ready, and then putting together an actual proposal for you. That proposal then outlines everything that we'd like to do for you in regards to which lender we want to go for, what amount we want to purchase for, what amount we want to borrow from them, the interest rate, the repayments, everything. So you've got all the facts and figures in front of you. And if you're comfortable with that, we then do the application to the actual bank.
Okay. All right, I think we've actually learned quite a bit today. I hope that you have. And the Help to Buy scheme, obviously that's for the under 700s. We obviously have properties that can fit into that category. So yeah, I really appreciate your time. I think it's been really, really useful. And if you're looking to buy a property, don't wait until you're ready to go and look at with an agent. Get to Jason and talk to him. Even if it's over the next 12 months you're considering, because it might even come further and closer to you in the next 3 months, because you, like you said earlier, the person didn't know how close they were. So maybe you're closer than what you think, but whether you're closer or you're a little bit further away, doesn't matter. Just simply come and have a talk. It costs you nothing. Sit down, have a chat, sit down with your finances and actually work out where you stand, so that you know when you go out into the market and speak to agents like ourselves, you get an understanding. Listen, I can buy under 700 because I've got this Help to Buy scheme that maybe you didn't know about. And as well, just you are a little bit more aware of what you can do in the market, and at least be able to get into the market. I think it's one of the big things.
100%.
And as you mentioned earlier, even those that have been in the market and didn't know these government schemes still apply to you, well, you made it clear they still apply to you. So trust you get hold of us, and thanks so much for joining us. And that's us for today. And please don't hesitate to contact us. If you need any information, get hold of me, and I'll give you all of Jason's details.
No worries at all. Thanks again.
Thank you.